Mark with Think Insurance, and today we're going to talk about the 10 myths of car insurance. You're not going to believe what number 5 is. It's kind of crazy. Let's dive right in. The first myth is the older your car is, the more likely it is to be stolen, the more expensive it costs. And that's not true. The fact is, the older your car is, yes, the security features may have been broken, but each car has specific security features that are strong. Most likely and most commonly, your Honda Accords, your Honda Civics, those are the most stolen vehicles. If you haven't watched the stolen vehicles top 10 that I've done, I'll link that below. But these smart keys are really powerful. If you have that technology in your vehicle, super expensive to replace if you lose it, it does prevent the theft of vehicles going forward. Myth number 2 is the more expensive your car is, the more it costs to insure. I've insured plenty of trucks that have been worth $50,000 and $60,000 that cost almost as much as a $40,000 truck. Sounds kind of crazy, but the use of the vehicle makes a huge difference. The type of paint, whether it's built in or has to be faded into the car, makes a difference. The safety features makes a huge difference, but the value of the vehicle isn't necessarily a factor that they're playing. The security feature is part of that value, but the more stolen cars, the more expensive. Myth number 3 is my car insurance will cover any of my personal items, such as a laptop or CDs and things like that in my vehicle. That is also a myth. Your home insurance or renter's insurance will pay for that, but your car insurance typically excludes most of the time in most companies, and the ones that do offer that coverage or build that coverage in, which is few and far between, don't give you much of a value. Might give you a couple $100s for a stereo, maybe a laptop, not likely. They're still going to force you to pay for home or renter's insurance to cover that liability or that property damage. Myth number 4 is if I lend my vehicle to a friend or somebody, then their insurance is going to cover them if they have a loss. Not exactly. Your insurance follows the vehicle. Now, could it go back to the person? Absolutely. In a claims where they're going after the person that's liable, the insurance is going to go after that person, but the actual damage of your vehicle is going to go back to your insurance. So whether you have full coverage or not, that's what the vehicle is going to be covered for. Myth number 5 is if I get a ticket, my car insurance is going to go up. Now, wait a minute. It should go up. But it doesn't. Not always. So the way that insurance companies work is it's based on risk. The area, the profile, how long you've been with the company, they don't always check what's called a motor vehicle report. And that motor vehicle report is where those tickets show up. So if you're in a less risky area, if you've been with a company for a while, they might not pull that motor vehicle report for years later, or even when the ticket has fallen off of your record completely. If you've got a new ticket, that's why some people switch insurance right away, is because it allows you to go that extended period of time where they likely won't have the ticket on file. Myth number 6 is my car insurance will cover my personal and business use of a vehicle. You actually have to list what you use a vehicle for. If it's personal use, that's just pleasure, driving around town, going to different shops, things like that. If you're commuting, that's a commute use. If there's business, let's say you have a truck and you drive to different sites. Sometimes you got to carry lumber, sometimes things like that. They allow a little bit of that use, not necessarily towing things, that's different. If you're using it for an actual commercial business use, that's a completely different policy altogether. The other part that a lot of people think is covered is if I'm doing Uber, Lyft, Grubhub, or any of those delivery services. Those aren't covered unless you add the rideshare endorsement. In some cases, companies allow the rideshare for Uber and Lyft, but not necessarily deliver of foods and goods. So the Grubhubs and whatnot may be excluded from your insurance policy. Make sure that you have the right coverage for that. Myth number 7, no fault means no fault. That is a tough one because it doesn't necessarily mean just no fault. It does, but it doesn't. It's one of those weird myths. It covers your liability. So if you injure somebody, if you damage someone's property, that is where everybody goes off and gets their own insurance. They file their own claims. But what happens in the background is they fight, they litigate the insurance claim. That doesn't necessarily mean that you are covered for the property damage on your vehicle. You have to add that additional coverage, comprehensive and collision. If you get injured in the vehicle, you don't necessarily have med pay or medical In a lot of states, they have PIP, personal injury protection. Those parts will cover your medical, but if they're not part of your policy in a no-fault state, then you may not have the coverage that you think you have. Myth number 8 is it's okay if you unintentionally put the wrong information on your application. That could reduce your coverage or void your coverage altogether. You sign a piece of paper at the very end. Most of us do e-signatures. And when you're signing that, you're saying everything to your best of your knowledge, but it's still your responsibility to have the correct information relayed to the insurance company. In those scenarios, if you don't list drivers that are driving your car or situations that could be a risk, you may be completely denied altogether. Myth number 9 is if you have a collision, your car and your loan are going to be paid off. There's actually a coverage to protect you called gap insurance. If you don't know about gap insurance, I'll put a link on the YouTube channel, but it basically pays the difference of the loan to what the car's worth. If I had a $10,000 car, but I owed $12,000, the insurance is only going to pay the value of the car unless you purchase the gap insurance. You don't have to buy it through the car insurance. You can buy it from the dealer or many aftermarket places, but that will cover that gap between the two. And myth number 10, shopping for car insurance won't save me any money. If you haven't seen this channel, you should definitely subscribe because this is what we are all about, is helping you find what companies are the right fits for people. In other words, we have things called profiles. And if you're 35 versus 45 versus 85, each company wants those types of people. And when you don't shop for car insurance when life changes, different house, different location, different cars, different credit scores, insurance scores, all of that changes your profile and your risk. And when that changes, different companies step up and are more competitive. And there you have it. Those are the 10 myths of car insurance. Share this with somebody that you think needs this advice. Let me know what myths got you. I personally have found number 5 to be the trickiest. Let me know in the comments below. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.